G'day there, Ray Corcoran here. In this week's video, we're going to be going over the September RBA rate rise. What is it going to be? Where does this all end? There's been a whole bunch of rate rises lately, 4 in a row, May, June, July, August. Now we're coming into the September rate rise. That's coming up in a few days, or the rate decision is coming up in a few days. So in this video, I kind of wanted to unpack, what do the experts think that people are going to do? What do all the big banks think the rate rise is going to be, if there is one? What is my uneducated opinion on it? And just generally, we're going to look at what past rate rises have been like historically, in years gone by. And is what we're seeing now unusual, and can the past give us some clues around what we can expect future rate rises to be? And as always, if you are new to the channel, my name is Ray Corcoran. We do videos on making more money, investing your money, and saving money. So if you want to subscribe, please do so. And if you find this video useful, please give it a like. It does help it reach more people. So a lot of households are worried right now. They're seeing numerous rate rises in a row, and quite large ones. Rate rises aren't usually 50% back to back, which we'll talk about in a sec, but they're also facing problems from multiple fronts. There's cost increases for petrol, groceries, electricity. So everywhere you look, everything is seemingly costing more money. And with wages not increasing at a very fast rate, a lot of people are just simply not having a lot of dollars left over at the end of the month. So people are checking the rate rises with great interest, pun not intended, and they're keen to see, where is it going over the coming months, and where actually are we going to end up by the time it gets to December? So from around May 2016, we've kind of been loving life. There's been, in terms of rate rises, it's actually been pretty good. It's been under 2% for the last 6 or so years. So we've had it quite good. And it got as low as 0.1% in November 2020, and it actually stayed there until April 2022. Ironically, April 2022 is when I bought my family home, and I spent the most money I've ever spent on a house. And it was probably the worst timing you could possibly do. And then from there, we've had a rate rise of 25 basis points in May, then 50 in June, 50 in July, 50 in August, and now people are looking to see what September holds. But 50 basis points in 1 month actually isn't the biggest increase that we've ever seen in a single month. In October 1994, the cash rate actually increased just in that month by 1%. And then only 2 months later, in December 1994, it increased by another full percent. But after that big rise though, after about 18 months from that point, it did end up dropping by the same 2% after those 2 single percent increases. And if you actually look at any of the rate increases since 1990, you'll actually notice that any kind of quick or steep increase is usually followed by a decrease of the same or more within 6, 12, and sometimes 18 months. So it may be reasonable to expect that any kind of fast increases that we'll see now may have, the other side of the mountain where it comes down by the same amount. That said though, rates are historically extremely low. So that might not happen this time because we're already at an extremely low level. And, if you look at the interest rates from about 2010 to 2020, they were averaging out at around 2.56% for the cash rate. So, if we're at 1.85, whatever it is now, then, we've still got a little bit to go back to some sort of recent average. So in the August rate rise, we actually saw the RBA say that they are not on a preset path, and they actually look at the ongoing incoming data to see what their decision is going to be. And they're trying to let people know that they don't, or they're trying to pretend at least that they don't have a set number in their head that they're just charging towards. They make the decision on a case-by-case basis as the data indicates to go one way versus another. But a lot of people are skeptical about what the RBA says because only a year or two ago, they were saying that there's going to be no rate increases until 2024, and that has totally gone out the window. So I guess you can take whatever they say with a grain of salt. And they've actually, in modern times, they've never done 3 consecutive 50 basis point increases. And there's only actually been 2 times in recent history, in 2009 and 2010, where they've ever actually done even 3 rate rises of any size 1 month after each other. And but even the difference there, it was a 25 basis point increase 3 times, and then a 25 basis point increase 3 times. So, compared to what we're seeing now, which is instead of 75 basis points in 3 months. We're seeing 175 basis points in 4 months. So it's a much quicker increase in a short period of time. In August, the RBA pointed to high inflation of 7 to 10%, the resilient economy, and also a continuing tight labor market as some of the reasons why they are continuing to increase rates. And in the June rate rise minutes, they did mention that rates were still very low at that time. And they've since stopped saying that rates are still very low. So CBA economist Gareth Aird, he said that he thought that the removal of that mention kind of suggested that maybe the RBA is getting closer to the point that they wanted to get to, and future rate rises are either going to stop or slow right down from here. And typically a business as usual rate increase is 25 basis points. That's usually what you'll kind of expect to see. And what we're seeing now is, big whopper, 50 basis point increases, and they're all back to back. So it's been quite sudden. And Gareth suggested that he kind of expected another few 25 basis point, normal rate rise increases from here before the end of the year. In terms of expert predictions, because who doesn't love experts who seem to literally never get anything right, CBA has predicted a 50 basis point increase for September. NAB has predicted a 50 basis point increase. Bill Evans, the chief economist at Westpac, he has also predicted a 50 basis point increase as well. And he was expecting from October through to February that there would be every one of those months a 25 basis point increase, which would leave them in February at around 3.35%. Head of economics at ANZ, David Plank, is a little bit less optimistic. He thinks there's going to be 3 50 basis point increases coming up in the next few months, and he reckons it will get to 3.35% much quicker than that, potentially before the end of the year. And a guy named Sean Lancake, who is the head of macroeconomic forecasting at BIS Oxford, he actually predicted that they may do a 40 basis point increase, which is a little less common, but the rationale behind it was the RBA still wants to increase rates by a decent amount, but by doing it for 40 instead of 50, it will kind of put the community at ease a bit more and make them stress a bit less, because they kind of feel like we're already past the worst of it and that the big increases are behind us. In terms of what I think, with literally zero qualifications and literally no reason to listen to me at all, I think it's going to get to about 2.85% before the end of the year. I reckon we'll see a 50, then a 25 and a 25, and then one of the months will have no change. And I think that the RBA may even do no change in the month of December for Christmas, to sort of maybe give a little bit more peace of mind for families, because he's not the most popular bloke in the world right now, even though he's just got a job to do and he's trying to look after us, I guess, essentially. Whether he's doing a good job or not is outside of my pay grade, but that's what I think is going to happen in the next few months. I think September, probably another 50 and then a couple of 25s. I could be totally wrong, and I guess we'll find out. And ultimately, this is all apparently driven by the data. So if the data, consumer confidence is declining and consumer spending is going down, consumer savings are going up. So with all these things happening, it seems like it's all kind of heading in the direction that it needs to head to, so rates don't get too crazy, but we will see how it all pans out. So with that said, hope you enjoyed the video. Let me know below, what do you think rates are going to get to in September, and what do you think they're going to get to by the end of the year? And yeah, hope you found that video useful, and I'll see you on the next video.